Okay, perfect. So let's go ahead, hop on into it here. So just hopping right on into it, what exactly is a fair value gap, or how are fair value gaps created? So fair value gaps are created essentially when we have an excessive amount of buying or an excessive amount of selling being inputted within one close price range, right? Similar to how we have supply and demand. Think of our fair value gaps essentially as our mini supply and demand zones, right? But when fair value gaps are created, price moves too fast to the point where certain orders can't get filled, right? When certain just how we have orders that are being filled within the market all the time, whenever price is moving too fast, sometimes those fills won't get filled, right? Because price was moving so suddenly that there really wasn't enough time for those orders to really be inputted. So that's how fair value gaps are created, because we have a gap just like this, right where my mouse is, a gap that's being created due to excessive buying that happened so quick to the point where certain orders could not be filled. And when certain orders aren't able to get filled, typically price is going to want to retrace back to those areas so those orders can get filled. Price can do what it wants to do before it then moves to whichever side it's going to. In this case scenario, it'll be a move back to the downside so those buy orders can be filled, and then we can then have that push to the upside. So that's exactly what a fair value gap is. Now, the way that you can spot them is typically within, or not typically, is going to be within a 3 candle period. And it's usually going to be an aggressive 3 candle period. Like I said, fair value gaps are created whenever price is moving so fast to the point where certain orders can't get filled, right? And typically fast moves on the charts are aggressive, big candles, right? So that's exactly what we want to look for. So here you can see that we have one big candle here, another big candle here, then leading into another green candle. So pretty much 3 green aggressive candles in a row. And then one big thing that you want to look for with the fair value gaps is you want to make sure that the first candle isn't touching the third candle, isn't overlapping on the third candle. Like in this case scenario, you can see that we have this black candle here, this blue candle here, and this black candle here. You can see that these candles are all overlapping on each other, meaning there's no significant space between a certain candle. So if I were to draw out a horizontal ray on top of here, and then another horizontal ray below here, you can see that this candle, this candle, this candle, this candle, and this candle, right, don't have any space within each other. They're all overlapping, right? But when they don't overlap, that's typically when fair value gaps are created. You can see right here, when we start to have a bit more of an aggressive move, you can see some of these candles aren't overlapping on each other, such as this one right here isn't overlapping with this candle here. But let me get back to our previous example. So you can see that we have this candle here, this candle here, and this candle here. So if I were to draw out a line at the bottom of this candle and then draw out a line at the top of this candle, you can see that the third candle or even the second candle isn't overlapping with this candle. Like how I showed you guys here. You can see these candles are overlapping. This is not. This is one single candle that has its own space, that has its own gap. You can see the gap is within the space. These candles do not have a gap, right? So essentially what we want to do is, now that we have our gap created, we have 2 different gaps. So we have this gap that's created within boom, and then we also have this gap right here. You can see that this candle here isn't overlapping with this candle up here. So what we can do is, now this is how you're going to create fair value gaps, okay? So what you want to do is you want to find where the candle created the gap. So essentially we see here. So what we want to do is we want to mark out the top of the first candle and then extend it to the bottom of the third candle. Okay, now this is for bullish fair value gaps. Keep in mind, There are two different types of fair value gaps, or two different main types of fair value gaps, and those are bullish fair value gaps and bearish fair value gaps. Very self-explanatory on what bullish and bearish means. So you can then see, once we have our fair value gap created, you want to wait for price to then bounce back into this zone, bounce back into this gap, this exact zone that we had created, then wait for a rejection. And what that rejection means is, like I said earlier, those unfilled orders are left when the gap is created. So when price returns back to that area, those unfilled orders are going to be filled. And what happens when orders are filled, especially a lot of them? Price moves within to that direction, right? In this case scenario, they're buy orders that are being filled, so price is going to be moving to the upside. Okay, so you can see it's exactly what we had here: bounce, rejection, and then move to the upside. So that's going to be the first example. Now you can also see here we can have smaller fair value gaps, like ones like this. So you can see this candle here, this candle here does not overlap with this candle here. So there can be tiny fair value gaps, just like this one. You really just want to make sure that look at a certain 3 candle period. So we can see this candle here, and then also this candle here, right? Which is a 3 candle period, and we want to look to see, did the first candle overlap with the third candle? And you can see there is a tiny bit of space, just like how I just created the gap. So we extend that gap out. Like I said, you want to wait for price to return back into that gap. You can see we literally tapped and bounced into that gap beautifully. We got that rejection and price moved back to the upside. Continued to move to the upside, right? So you can take trades off of fair value gaps. You can use fair value gaps as your take profit or exit areas, or you can just use fair value gaps as a tool to understand where certain reversals are likely to happen on the charts. So that's going to be another example of a bullish fair value gap. And typically just how I trade my supply and demand zones, my stop loss is going to be, whenever I'm trading with the fair value gap, my stop loss is just going to be a break below the fair value gap or break above the fair value gap, depending on what type of fair value gap I'm using. So we were just covering bullish fair value gaps. Now we want to dive into bearish fair value gaps. So essentially we now want to look for an aggressive 3 candle period to the downside, right? So in this case scenario, we see a pretty aggressive move here, which is likely for a certain gap to be created. So let me see right here. So you can see this candle right here does not overlay with this candle down here. You can see there's a bit of space. Even if I were to draw a line, boom, and then let's see, 1, 2, 3, boom. So you can see just a tiny bit of space, but this candle, the first candle, isn't touching the third candle, which also creates a fair value gap for us, right? So for now, what we want to do is actually that would be a let me see. You could do right here the bottom of the third candle. So for bearish fair value gaps, in this case scenario, we're going to do it differently like how we did for the bullish. So for the first candle, we're going to mark out the bottom instead of the top, then extend it down to the third candle, and then extend it out. Then you can see price retraces into the fair value gap. We get a beautiful rejection and beautiful reversal to the downside. Why did we get the rejection / reversal? Due to the unfilled orders that were being left within that gap, right? Depending on how strong the gap is, or depending on how many times price actually reversed and rejected from that gap, will kind of indicate to you how strong those gaps are. But typically you only want to trade, keep in mind, you only want to trade fair value gaps on its first or second rejection. Those are typically going to be the best high probability chances of your fair value gaps actually working. Keep that in mind, because you can see we get that rejection / reversal. Then you can see it then breaks through and then pushes to the upside. So that is going to be that. And then let's go ahead and find another bearish fair value gap. So again, we want to look for a bearish 3-candle period. So right here, you can see again, 1 candle, 2 candle, 3 candle. First candle isn't even close to the third candle. You can see a significant space, right? Significant gap. So let's go ahead and draw it, extend it out. Boom. Then you can see price does its thing. First time we tap into that gap, we get the rejection slash reversal. Same thing here again, rejection slash reversal. Now, sometimes fair value gaps are going to provide you with big moves. Sometimes they're going to just provide you with still tradable small moves, but you never want to get so greedy with them, right? You never want to get so greedy. Like I said, think of them or treat them as mini supply and demand zones. Still high probability reversal areas on the charts, but nothing too crazy. Still just a tradable, significant move enough for you to see, okay, we had an excessive amount of buying or excessive amount of selling being inputted. So that's going to be that, fam. Going to go ahead and wrap up the lesson